Uncensored, the truth about money.
Greetings, everybody. Welcome to another episode. We are on episode number 3. Can you believe it? Number 3. Our last episode, we were talking about the truth about vehicle financing, right? But unfortunately, because of time, we didn't finish. So today's episode is just basically continuation of that episode. So if you are Mamel episode number 2, I suggest that you go back and listen to episode 2, the truth about vehicle financing, and then continue to this episode. There's something interesting that I read just yesterday about car financing, right? And it's an article online. So I would like Pratamza to just tell us a little bit more about that, the article. Pratamza Fede?
Yes, Mr. Chuchu.
Grand winner.
I know, all good, my brother. Yes, you're on episode 3 already.
3 already.
Hey,
Can you believe
I
it?
know.
So that article, can you please just tell us more about it and just explain it to us so that we can understand?
All right. So basically, the Competition Commission, which is a body of people who promote like fair competition in the motoring industry, such as manufacturers, between repairers, insurance, and financing. So what they've done is that they've released or they've amended certain laws or rules within the motoring industry, where as from the 1st of July, there's what we call bundling. So bundling happens when you go purchase a car. In the purchase price, they actually include, the maintenance plan and the service plan and warranties. All these value-added products, they add it into that purchase price without disclosing it to the purchaser. So what they've done now is that they've told manufacturers or dealerships to say that, listen, you guys need to disclose, first of all, how much your customers are actually paying for these services, whether it's maintenance or warranty or any other value-added products which is added onto that. And second of all, you need to basically give the customer a choice whether they want to have that value-added product as part of the purchase or not. So now, as from the first, there will be some unbundling happening. And then another thing is the transfer of maintenance and service plans. So if I get into an accident while I was basically paying for a service plan, right? So now that service plan will now be transferred into the new vehicle or replacement vehicle that I'll be getting. Or if I don't want to continue with that, I can simply cancel it and receive a refund, for the remainder of the period that was left for me to pay off that service plan. Because now what has been happening is that some service providers have said that, okay, Junior, you had this car for 5 years and you crashed it in the 3rd year, so you need to keep on paying for the remaining 3 years. They see it as a contract on their side. So the Competition Commission has said, no, Junior cannot pay for something that he is not using. And then another thing as well is that independent repairers, when we take our cars when they're out of, let's say, warranty or service plan, they now have the rights to go to dealerships or manufacturers and get the original parts. So there's certain dealerships or manufacturers which have been giving, repairers, a run around in terms of getting, new parts for them to service the car, because obviously they want Junior to bring in his BMW at the dealership as opposed to servicing it out there. And then another change as well, as from the 1st of July, if I went into a dealership and I inquired about let's say a BMW M3, and in the dealership, they sell various cars and they linked to other dealerships as well. So my profile cannot be shared with other dealerships until, I give them a go ahead. So I can basically file a claim against them or, a disgruntlement against them if they do pursue that. So my information will basically stay and end with that transaction that I made with the BMW M3.
So let's say I'm driving a Mazda and it has a service plan, and then I get into an accident for So, and then now I want to go buy a Toyota. Can I transfer service plans from one brand to another?
I don't think you can, because remember, if you've got that service plan with Mazda, they have obviously calculated beforehand how much certain parts will cost, how much your car in terms of its value and so forth, what needs to be changed at at what service interval. So when it comes to you choosing a different brand now, it won't basically correlate with the calculations that they did. So I think if you had taken out a Mazda service plan, you obviously have to get another Mazda car to replace the one that has been written off.
That's interesting. Let's just continue from where we left off the last week, right? So obviously we spoke about the interest rate, balloon payment, repo rate, and all that stuff, right?
Yeah.
Just as a follow-up question, what is the legal highest rate on a car loan?
On a car is basically 27.5%. So that's excluding like your service and initiation fee. So the highest percentage or interest rate that your bank or finance institution can charge you is 27.5%.
Sweet. So they can't charge you anything more than that.
Yeah, no, I think with dealerships, obviously they can't. But when it comes to your private sellers, it's a different ball game when it comes to them, because obviously they're able to inflate or take down prices as it may be. So they don't necessarily need to sell a car at market value. It's upon an individual's choice and preference if they want to actually increase the price by 200%. So yeah, I think this now comes to your finance institutions.
Mm. But I guess it's so much better to just get a car from a dealership because you have all these laws that protect you as a buyer as well, you know?
100%.
So let's talk about insurance. And I feel like this is the one thing that most people ignore the most, you know? And it's very
Yeah,
important because if you go to a dealership and want to buy a car, you won't drive out of that dealership without insurance.
100%.
Please explain the difference between low premium versus low excess.
An excess is basically a lump sum that you pay when you get into an accident or your vehicle gets damaged. Whether you were right in that accident or you were wrong, insurance basic companies want you to still pay you that excess. So there's two types of excess. So there's compulsory and there's voluntary excess. So
Okay.
compulsory excess is basically what the insurance company wants you to pay. So there you can't negotiate with that. It's a stipulated amount, and obviously, if you're a young driver, inexperienced, you can't. You basically pay a high excess, as opposed to someone who's 40 years old and who's had like 20 years driving experience. So on top of that, you get voluntary. So voluntary is included in the voluntary excess includes the compulsory excess. So with the voluntary one, that's the one that you now choose to say that, all right, I want my access to be low, so that I can, pay a proper premium. So basically, these things they correlate in such a way that if you have a high excess, you pay low premiums. If you have a low premium, you pay a high excess. And what a lot of people is that they buy nice vehicles, but they're actually not looking into the whole picture of incorporating the insurance into that. They're just looking into the installment that they're going to pay at the end of the month. And now what most people do is that they now get that insurance for that certain amount, and they hope and pray that they won't get into an accident. But now when they get into an accident, the repairers want that lump sum in terms of the excess, and sometimes it's high. And most of the time, people don't have that lump sum to pay to repair the car. And certain cars, that's why you see them driving around with missing fenders or bumpers are still not replaced, because that was not taken into consideration. So people should always do their research before going into buying a car.
And it's amazing because people literally lose cars because of that. Because now you have a car that has been bumped, and before they can work on it, they need this lump sum of money, and you obviously don't
Yeah,
have that money. And ngapha
yeah,
it's ihleli kibo, and they are charging you for storage and things like that. You know.
yeah. That's true.
Hmm.
So that's why a lot of people aren't doing their research, and they just want the easy way out. So it's important to always look at your affordability. In the first episode, we covered budgeting and knowing your financial standings. So you need to be honest with yourself. If you can't afford that C63, don't buy the 63 yet. Just wait a bit. Tell your financial standings are fine. Yes, you can afford to pay the installment, but then, as you said, there's the insurance part of it, and with insurance comes the excess.
Can you please just explain depreciated value of the car recorded by the insurance?
All right. So basic depreciating value of a car it's based on it's affected basically by the wear and tear of the car, how you drive your car, the mileage, and also the economic conditions. So an interesting fact is that if I go into BMW now and buy that M3 for R1 million brand new, as soon as I leave the dealership, that car can lose up to 15% of its value
Yeah.
before I get to the next robots. So the car basically depreciates in that way. So what insurance companies do is that on their systems, they've got a log where they know that after a year, the car has depreciated in value by such an amount. And if, let's say, I get into an accident, now they work out the market value. So basically, the depreciation value is the difference between the purchase price and the market value of a certain car. So I might buy that M3 for R1 million in 2021. 2 years later, I get into an accident, but now my M3 is worth 600,000. So that 400,000 difference or deficit is what we call depreciation value.
Let's say now this car is worth 600,000. Would I still be
Yeah.
paying the same premium on insurance?
Ideally, when you think about it theoretically, you should be basically your insurance amount should actually be going down every single year because your car depreciates in value every single year. But that's not what happens in practice. So what happens is that people what they do is that because they know that my car is not the same value as it was when I purchased it, people every single year they get quotes to find out how much they can pay for the new value of the car. So that's the only way. But if I'm gonna be sticking to, let's say, this ABC insurance, and I'm paying, let's say, 8,000 rand every single month on insurance on my M3, it'll actually rise with inflation on a yearly basis if I don't opt into getting a secondary quote on my car.
Can you save a lot on that?
Yeah, you can actually save a lot just by on a yearly basis phoning the other insurance companies and finding out how much they can offer you in terms of the of the premium, or how much they can save you in terms of the premium.
So basically, we've spoken about interest rates, we've spoken about balloon payments, we've spoken about repo rates, we've spoken about insurance. So is it safe to say that we can close this chapter and move on?
So the other question that was raised is that the leasing of a car versus the buying of a car.
Oh, yes, yes, yes.
Yeah, so I think with that, so obviously looking into what happened, what's happening now in terms of this pandemic, a lot of people are getting their cars repossessed, and because of, let's say, their business is not doing well, or they've lost their job, or they've had to support additional family members who've been affected by this pandemic. So people now are actually opting into leasing cars. So leasing a car is basically like renting. So you don't necessarily own the car. The responsibility of the car is held with the dealership. So I go into BMW, I lease that M3, And if anything happens in terms of my business or my job, it doesn't affect, my credit score or my financial standings. I can just basically simply, take the car back to them without any hassles, as opposed to if I then, own the car and I can't afford to pay it, then, it's a different ball game where the sheriffs come and they repossess the car, but I still have to pay a certain amount after the car has been auctioned off. So there's some advantages, in terms of leasing a car. So when you're leasing a car, you basically can drive a new car every single 2 years, 4 years, according to your preference and the contract that you get into. Another thing as well is that at the end of the term, you can simply take the car back, or you can choose to purchase the car at a very low amount, since you've been basically paying for the car every single month. So now the disadvantages about leasing is that when you lease a car, they actually stipulate how many kilometers you can drive in a certain month. So you can't exceed those kilometers. And if you do, they actually impose penalties. You can't, if you've entered into, let's say, a 2-year contract, for you to cancel, let's say, that contract within a year, then it becomes a bit of a hassle. So there are some advantages and disadvantages of leasing, but a lot of people now are going into the leasing route because they're uncertain of the future, but also it makes more financial sense for them because leasing a car is a bit more reasonable than actually paying that installment. We spoke about balloon payments last week. So when you lease a car, obviously you don't have to pay for that balloon payment as well.
So, Pratamza, we've come to the end of our show, episode 3. It's a wrap. Thank you so much for listening. Thank you. Guys, please go on Instagram, follow us on Instagram, uncensored_ the truth about money. So you can literally ask whatever that you need to know. If you feel like we haven't covered a certain topic, if you feel like we haven't answered most of your questions, please go onto Instagram, send us a message, ask us whatever it is that you would like to know. So from us, thank you so much. Thank you for listening.